Folks, if you've been paying attention to my tone since the election, you may have noticed a change. I've been more fired up, uploading more frequently, pushing harder, and there's a reason for that. It's because I believe that we're standing on the edge of something big, and it would be a massive shame if we missed it. Folks, this is the most important video I've ever uploaded. In today's video, I'm going to cover number one, the unique opportunity that I believe you and I have as market participants right now. I think this is obvious and undeniable. Number two, the melt-up that is coming, one that I and many other people believe will create massive wealth, but also destroy massive wealth for those who ignore it. I believe that this is a situation that will make the rich richer and the poor much poorer. And what you do now is going to set yourself up to be in one camp or the other. We're heading into an environment with massive opportunity, but also massive risk for those who ignore it. So you definitely want to watch this video. And as always, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. And today's video is brought to you by our Black 75 sale on ZipTrader options. Get 75% off our one-time fee for membership, and you get our private chat, our alerts, and our step-by-step video lessons. This coupon code expires tonight. Biggest percentage off of the program ever. Okay, folks, so as I see it, we as market participants have about 6 major themes planned in our favor. A, the artificial intelligence revolution. If you look back at the last 100 years of the stock market, every major technological advancement results in incredible gains in productivity and cash flow and stock market returns. And this time should be the most extreme we've seen since the advent of the personal computer. B, change of government. Going from an overly restrictive administration to a substantially less restrictive administration is a big stinking deal. Whether you are or aren't a fan of Trump, the truth is that Biden was an agent of stagnation and frustration for the financial sector and the economy overall. So just getting him out of the office is a big stinking deal, and putting somebody into office who is super pro-business is going to make a big stinking difference. C, interest rate flip. Going from worst hiking cycle in decades to consistent easing, that in and of itself, all else being equal, is a massive, massive green flag. D, suppressed valuations in small caps. 3 years of suppressed growth in many small cap stocks means there's a big catch-up game going on. Many small cap growth stocks with huge revenue numbers and EPS beats are trading well below their 2021 highs, whereas many large caps with much more modest growth rates are like 50% plus of their 2021 highs. So small caps, which usually outperform in periods where they're favored, are still at very, very low valuations and account for the vast majority of the exponential growth in today's economy. E, sideline cash. If you look at the data, there's a lot of sideline cash, and it's still climbing. Now it's $7 trillion in terms of total money market fund assets. And as rates go down, this will be incentivized to buy stocks and real estate, which will then cause valuations to continue to soar. Those that stay sidelined will get their cash eroded. If you look at some recent data on household cash, we are at $18.4 trillion in household cash. For comparison, the entire U.S. federal government spent $19.2 trillion from financial year 2022 through 2024. And the S&P 500 trailing 12-month sales are at about $16.7 trillion. If consumers start to feel more confident in the beginning of the year, where will this money go? Well, a solid chunk of it will go into S&P 500 sales. People buying goods and services from the biggest companies, helping earnings across the board get better. Another solid chunk will go to assets like real estate, gold, commodities, so on and so forth. And a lot of it will go into the market. F, crypto industry green light. So the Biden administration, the Biden SEC, and all relevant parties were incredibly anti-crypto. They were anti most things in regards to businesses and growth, but with crypto, they were really trying to cramp down on it. Why would they do this? Well, current policymakers are a big fan of massive, centralized, all-powerful, and all-knowing federal governments. And naturally, crypto in and of itself is the exact opposite of everything they represent. Crypto, while it does have some problems, is all about being decentralized. It's all about giving freedom back to those who hold it. So if you're somebody that believes that at its core, the government's role is to control almost everything in a citizen's life, well, you're not going to be a big fan of crypto. And so now that the administration is changing, we're seeing a massive flip. President Trump embraced crypto. He's the only president that has ever fully embraced crypto. And he didn't do it in his first term. He just did it in this current campaign, and he put together the most pro-crypto administration ever. Well, we're heading for 4 years of massive development for the crypto industry, where the government isn't constantly cracking down every other Tuesday. Big opportunity for the crypto industry to blossom. So you put all of these together, and what do you get? Well, a massive overflowing of opportunity. And for the most part, these things have only just begun, and they're in their infancy, or they're not happening until January in the case of the change of administration. Yet you're already seeing massive runs throughout the market. massive players that benefit from these criteria, enjoying huge valuation increases. If you look at this Palantir run from $5.84 to $67.88 at highs, and you're thinking, damn it, Charlie, I wish I bought more, or I wish I didn't miss this. Well, don't worry. Not only does Palantir have a lot more upside, but there's a lot of other stocks as well that didn't get this wave of recognition despite having deserved it, that markets will wake up to in the coming weeks and months. The stock sold off massively in 2022, but the company itself continued growing exponentially. That was a massive and obvious divergence, and you can look back at my videos, I said that many times. Even today, people are looking at Palantir and they're like, oh man, this is an overvalued pump and dump bubble. And sure, Palantir is going to have its breathing cycles, of course it will, but if Palantir stock followed Palantir, the business, it would have overall looked like this. So again, is this a pump and dump? Is this a stock that's not justified? Is this a stock that's actually garbage meme shit? No, of course not. It's a stock that was suppressed for years, and now all of a sudden markets are willing to acknowledge it. And that is the opportunity that we're heading into in broader markets as well. Now, okay, so where is all this massive opportunity going to be? Well, very simply, it's going to be in businesses that are showing exponential growth within exponentially growing industries. If you could find businesses like that, buy them, hold them, don't sell them. Some of the examples of the ones that we've long called out are Palantir for AI, Tesla for AI and robotics, NVIDIA and ARM for chips, PanW for cybersecurity, Mara for Bitcoin, Coinbase for trading crypto, SoFi for personal finance, Upstart for AI lending. These are all stocks that we called out early on here in the channel, but they all fit the criteria of massive growth, exponential growth, in an exponentially growing industry. But for you to find these yourself, I'm going to give you 5 different criteria. I want you to take a screen grab of these 5 different criteria. And every time you're looking for a stock, make sure it hits these 5 criteria. Number 1, strong revenue and earnings growth. Key traits of that, revenue growth of 20% plus annually. Consistent quarter-over-quarter growth. Accelerating is a big bonus. Positive or improving earnings per share. Number 2, large total addressable market, TAM. Tammy McTammy, total addressable market. Always remember Tammy. Key traits, operates in or expands into a high growth industry. TAM significantly larger than current revenue. Why it matters? Well, a large untapped market provides long-term growth potential. 3, competitive advantage and moat. Key traits, unique intellectual property or specific innovative technology that other people can't copy or they're far behind on. High barriers to entry for competitors, strong customer loyalty or brand recognition. Why does it matter? Well, a moat ensures sustained growth and market share protection. Examples, a biotech company with an FDA approval for a breakthrough drug, an AI company with IP protecting their analytic software like Palantir. Number 4, robust financial health. Key traits, strong balance sheet with low debt, positive cash flow or a clear pathway to it, reinvesting aggressively in growth areas like R&D or marketing. Why does this matter? Well, financial health fuels growth sustainably. A company that sees massive growth but doesn't have the money to continue servicing the demand will go belly up and some other competitor will outcompete them. Number 5, catalysts for future growth. Upcoming product launches or market expansions, strategic partnerships or government contracts, secular trends like AI, 5G, or renewable energy driving demand. Massive amounts of R&D is also an indication of future catalysts for future growth. That's why when Palantir was investing in R&D, I said, hey, don't listen to Wall Street that thinks they should shoot out all that R&D as dividends to shareholders. Listen to the company that says, hey, we're doing this so that we could build something big. And apparently that second strategy is paying off pretty well, right? 6, insider and institutional activity. Increased insider buying signals confidence from those with the inside knowledge. CEOs, hedge funds, big names on Wall Street, Congress, Nancy Pelosi. All of these are big bullish flags for a company. Following somebody like Nancy Pelosi, for example, gives you a lot of insights that you might not otherwise have. Nancy Pelosi's portfolio returned 763% since 2014, whereas the market average, the S&P 500, returned 219%. If you are not paying attention to what Nancy Pelosi is doing, you're missing out on a big resource. You are losing a big edge that other people have. And it's the same thing with other members of Congress too. You need to pay attention to Congress. You need to pay attention to what CEOs are doing. You need to be able to pay attention to institutional investors. And yes, I understand that some CEOs will regularly sell stocks. You have to be able to tell the difference between a regular stock sale and one that is happening because the CEO has abandoned the company. So folks, I'm telling you, if you just follow this list and you drown out the noise, Well, I believe you're going to do very, very well, and you're going to do very, very well again and again and again. And if you look at all the stocks that we've talked about on this channel over the years, they almost always display all of these traits, because this is my simple but very tried and true strategy for finding stocks that win. Now, my promise to you is that as we head into this continued opportune market condition, well, my team and I are going to continue to do our best to present you with the best ideas that we know how to give you. If you look at our past statistics here on the channel, in 2020 and 2021, we added some 500,000 subscribers to this channel. That's the bulk of our current subscriber base. How did we get all those folks though? Well, because that was a period where markets delivered massive, massive opportunities and everyone was trying to figure out how to best take advantage of them. And it was hard to pick out the good from the bad, so lots of people came to YouTube to watch people that were able to present these opportunities at the right time in a simple, easy to understand way, versus like how they do it in the mainstream media, which all of the content is all obviously biased. On this channel, we provided consistent new ideas almost day after day, many of which went up hundreds of percentage points. And we know that markets deliver big opportunities during big times of change. 2020 and 2021, those are periods of big change. Right now, we're heading into another period of big change. And we're going to also have a big opportunity. Now, what did we get after that 2020, 2021 era? Well, we got years of financial stagnation and a frustrating market where there were still opportunities, but it was a lot more challenging and the overall retail interest in markets trended down substantially. But everything is changing now, and I believe we're heading into something that's going to be even bigger and better than 2020 and 2021. And folks, we've actually already started to see the biggest growth that we've seen on the channel in years. I greatly appreciate the opportunity to be able to come on here and talk to you and present the setups and present the information as best as I know how to give it. And it's super fulfilling when there's stock after stock that we've believed in for years alongside all of you, like Palantir, SoFi, so on and so forth, that have seen massive, massive gains. But folks, I believe this game is just getting started. Now, that being said, this time around, we have a lot bigger of an apparatus to provide value to you. For starters, of course, we still have the channel breaking down our bigger picture ideas and where to look. But number two, we also have our free daily email newsletter and SMS alerts where my team sends out reports on big picture news items and new ideas. We send a total of over 1 million emails a month amongst our overall audience base, and this is all free. This has become a big part of our way of contacting you with the research. On YouTube, you may get views, you may not, but on emails, everybody gets an email, so if you're interested in reading it, you'll always see the email. And number three, we have our options membership. This has now become a core service for us because it allows us to alert unique options plays on our favorite stocks before massive catalysts, like for example, our Palantir calls, which are now up 321% alert price to highs, our SoFi calls, which are now up 442% as of this last week at highs, Mara calls 346% to highs, Coin ran 557% alert price to highs, Riot 284% alert price to highs, Tesla up 277% alert price to highs. You look at our HIMS calls, which is one of our newest plays. We alerted those on November 20th, not that long ago, at $6.11, and look where they hit Friday, $15. That means they ran about 145.5% alert price to highs, and I believe many of these calls are going to go up higher and higher as the overall trend of markets continue to allocate capital into growth stocks with exponential growth businesses. And my team and I are going to be sitting here every single day to present you with the best information that we know how to present you and give you the best alerts that we know how to give you. Make sure to take advantage of that black 75 coupon code on ZipTrader options if you want to join us. That expires tonight. But folks, bigger picture here, I want to talk about the melt-up that's coming. We talked about the opportunity, but we didn't talk about why, if you're not paying attention to this opportunity, you're actually probably going to become a victim of this opportunity. So a stock market melt-up is undeniably on the horizon for 2025. This is the clear result of unprecedented national debt levels, relentless money printing, and policies that will leave the poor poorer and savvy market participant much richer. Though sadly, if you're somebody that's thinking, oh, I'm just going to sit in cash for the upcoming years and I'll be fine, well, similar to how that performed if you sat on cash just the last 3 years, well, let's just say you might want to rethink that strategy fast. You need to understand, a melt-up is coming. A melt-up is when, simply put, it's when markets rally to insane levels, not because of just strong fundamentals, but because of excess liquidity, excess dollars in the economy. Why is that going to happen? Well, think about this. National debt is spiraling out of control. We've surpassed $35 trillion and we're adding way more every single day. Trump added a ton during his first term, largely because of COVID. Biden added even more. And when Trump gets back into office, well, we're going to continue borrowing and borrowing and borrowing. Even if Elon's Doge agency cuts the $2 trillion, we still are going to have a massive, massive problem. The Fed is also cornered. They can't keep rates high for long. The pressure to cut rates and stimulate will become unavoidable. The more and more they cut rates, the more likely we're going to head into an environment of excess liquidity. The bigger picture here, as has been the case historically, is that no matter what is done in the coming months, well, the overall trend of decades of poor policy decisions will mean that the government will continue not to be able to pay its massive bills. And whenever the government can't pay its bills, what does it do? It turns on the money printer, but it turns on turbo mode. The government sooner or later is going to have to inflate its way out of debt, printing money to pay the servicing costs on the debt that it already took out and devaluing the debt that we have, the massive $35 trillion, so that it's easier to pay back. This is going to rob the poor who saves money in cash, and it's going to make the rich richer who buy things like stocks, real estate, gold, commodities, so on and so forth. So you want to make sure that you're in the latter category. Let's connect the dots here. So historically, every time the U.S. racks up massive national debt, the playbook is the same. Debase the currency so the debt looks smaller, flood the economy with liquidity to prop up growth. So here's the harsh reality. If you're not buying stocks, you're not taking advantage of this opportunity, you're not buying real assets, well, you're going to be destroyed because your purchasing power is going to go whoop, just like it did the last 3-4 years. It's going to be like that again, but probably even worse. If you ever wonder why the wealth gap tends to completely explode during periods of inflation, well, that's why. Okay, so great. Charlie, a melt-up is coming, but where do we put our money then? Well, historically, if you look at all the previous melt-ups, here are the best places to put your money. Number one, growth stocks that fit the criteria I mentioned earlier in this video, companies with pricing power and strong market positions and exponentially growing business models. Number two, commodities and real assets. Gold, silver, even energy stocks tend to do incredibly well during periods of dollar devaluation. Number three, real estate. Real estate is a hedge against inflation because property values rise as the dollar weakens. Number four, dividend stocks. Reliable income streams from high-quality dividend stocks can help you stay ahead of inflation and help you reinvest for compounding gains. And number five, select cryptocurrencies. Bitcoin and Ethereum and some others will continue to act as a sort of digital gold, thriving on the narrative of a weakening dollar and financial decentralization. Anyways, folks, I believe that a massive wealth transfer is upon us, and I want to make sure that we're doing everything we can so that we're on the right side of that transformation. Anyways, folks, that caps off today's video. I hope you had a great turkey dinner with your family and have a great rest of your holiday weekend. We'll see you in the next video. Coupon code BLACK75 expires tonight. Make sure to get your 75% off our options membership.